Hello, Christoffer, and warm welcome to Fair Value here today. I'm here to interview Christoffer De Geer, the CEO and founder, or might I say, co-founder of Bitcoin Treasury Capital.
Exactly. Thanks a lot. Happy to be here.
Fantastic to have you. How are you doing today, Christoffer?
Really well. It's a nice day for doing Bitcoin. Every day is a nice day for doing Bitcoin. So that's I'm very content.
Perfect. We're here to talk a little bit about what's going on. What have you been up to in B2C, and what's the plan going forward here? But for those of our listeners that haven't heard about Bitcoin Treasury Capital before, or yourself, can you just give a brief introduction to the company and yourself?
Sure. So my name is Christoffer De Geer, and I've been working in Bitcoin for a very long time, and done most things. We've done mining in hydro plants and brokerages, and was part of the world's first listed Bitcoin instrument, which is XBT Providers Bitcoin Tracker 1. And then not too long back, we realized that there's a better system to store Bitcoin for the common person, which is that you have, of course, your normal Bitcoins, but then you have some in a more tax efficient structure like a Swedish ISK or something, and there you usually buy your Bitcoin shares in that sense. So it's an ETP or an ETF or something like that. But treasury companies, especially pure plays like ours, is a better way to store Bitcoin, because what we try to do is generate more Bitcoin for you instead of just taking a bit of Bitcoin all the time. So that's in short my background. And if I explain the company a little bit, BTCAB is what I think the perfect vehicle to generate more Bitcoin over time. So what we do is that we have a set of Bitcoins. Let's, for simplicity, say we have exactly 100 Bitcoins. And if we're valued at 150 Bitcoins, at the stock is valued higher than our net asset value, then we can do a direct share issuance, for example. So we raise funds, get money, buy Bitcoin, and for that then we have paid in shares. So we get more Bitcoin per share when we get the money and buy the Bitcoin. And that's the primary business model of the entire venture. We have no separate software business or a hotel in Tokyo. We are a pure play that just generates more Bitcoin over time, trying to compete with ETPs, ETFs, ETCs, or just storing Bitcoin yourself. So I think it's a very nice financial tool for people to invest in that wants exposure to Bitcoin and for Bitcoin to grow over time.
Fantastic. Now, I think using the commonality of stocks and exploiting the volatility of the stock market is a kind of, you can definitely use that to your advantage. But okay, Christoffer, let's talk about what's happened quite recently. You released your Q2 report, and as a Bitcoin company, can you explain a little bit briefly about the report and what that means for BTC?
Sure. So we listed, and when the Q2 report came out, we just listed. So it's not that interesting of a report. But if you look forward, what we've done since we listed is we've generated 6% more Bitcoin, which is really interesting, because without taking risk, we have generated 6% more Bitcoin per share for our shareholders. That means that if you had, let's say, 10 Bitcoins invested at the IPO, then you have 10.6 Bitcoins today. And that's really interesting, because if you try to do that yourself, it's a really hard process. You don't have, let's say you have Bitcoins, you have 10 Bitcoins in cold storage, let's say. Your alternatives are to lend them out to someone else, and they try to generate a profit somehow using your Bitcoins and then give you your Bitcoins back plus a little bit. That comes with a lot of third-party risk. Like, for example, you generally lend it out to someone like FTX and then it explodes and your Bitcoin are gone. It was not worth getting 4% interest on your Bitcoins to get 0 back. That was a bad trade. What we find interesting and what's good with this business, and why I got so excited when I realized how a Bitcoin treasury company functions, is that we can have, let's say we have again exactly the 100 Bitcoins. We can have them in cold storage. We don't have to take them out to generate yield, because what's trading is the share, our share on the stock market, and that's not going to get hacked or disappear. It's not on a blockchain, thank God. So the share trades and the Bitcoin price trades, and they're correlated but not perfectly. And as soon as it's either above or below, we have tools to execute Bitcoin yield for our shareholders. And even if it's at the exact level of net asset value, we can do other tools to generate yield for the shareholders. So it's a really good tool. Our share is a really good tool, I think, for shareholders to generate Bitcoin yield passively without having to try to lend their Bitcoins out or do something like this.
You mentioned the Bitcoin yield there, and I think we will dig a little bit deeper into what that actually means for the specific investor. But I think we need to start off, because as you mentioned there, you basically got listed in just the end of Q2, and you had the public offering. You managed to raise quite a lot of capital there. Can we just go back to the IPO? You raised how much money, and now how much money do you have right now?
Yeah, so we raised, the goal was, since it's a relatively new thing, Bitcoin treasury companies, we said that we need at least, let's say 25 million kroner to list, or something around there. And we went out and checked the interest and raised quite a lot more. So we got about 150 million in, we raised before the IPO, but at price of net asset value, so 210 kroner per share, we raised about 150 million. And since then we raised about 20 more. And what we've done so far with that money is that we bought more Bitcoin, and that's how you generated the yield for the shareholders. So raising funds was actually really simple, it turned out, because the interest of a Bitcoin treasury company is quite high. You have all the possibilities in the world to generate yield from that point on, but what I think is the most important is that what our goal is that we want to generate more Bitcoin per share forever and take very low risk doing it. So we have been bombarded with alternatives to get money by, for example, the fiat convertible offerings. But it's always, let's say they're 2 years fiat convertible, so that means we get money in today, and in 2 years we have to pay that money back. The bet then, in theory, would be to buy Bitcoin, and Bitcoin goes up, and then you have to pay back less. They don't do this for free, so you have to give them options and warrants, and they take a certain percentage of the money they will give you and get back. So it's a very expensive trade, and we've seen a lot of other treasury companies accept this type of offers, and I've been quite hesitant to that, because it's a very expensive trade with a lot of risk. As an example, if let's say it's a 2-year fiat convertible, and Bitcoin, you take money in, let's say you take in 10 million kroner or 100 million kroner, you take money in, you buy Bitcoin. Then Bitcoin halves during the next 2 years. You still have to pay back the same amount of fiat. That's not very good, because now you have to sell way more Bitcoin than you actually bought to pay back, and then you have a negative yield. So if that was a 10-year fiat convertible, yes, that's in my book very safe, because my bet is that Bitcoin increases over time, but not in a straight line. It's extremely volatile, and I think we will see the next bear market is going to be, the catalyst is going to be some Bitcoin treasury company with too much leverage that just, they explode, and then you see the cascading effect of treasury companies exploding down, which will be sell pressure on Bitcoin, and you see more and more treasury companies exploding. I don't want to be a part of that game. I want to generate more Bitcoin forever, because I have an extreme religious belief that just Bitcoin is the perfect asset, and you have nothing else that can beat it. You should just accumulate as much as you can of the perfect asset, and it's really important that you don't lose it, because you can't even fathom how valuable Bitcoin is in the future. So discounted cash flow models, nothing works. It's just get as much as you can, and that is what we're trying to do with this company, without taking insane risk.
Yeah, and that was kind of my point, where you started off, you had a nice IPO, you managed to raise 150 million SEK, and you bought Bitcoin for all of it, and now you have what, 180 million worth of Bitcoin, which is pretty much like 18 Bitcoins or something like that.
Well, not 18 Bitcoins, but we have 187 Bitcoins, I think.
Ah, yes, correct. My bad.
That will be 18 Bitcoins in the future, though, the 200 million. So just wait. It will 10x and 100x, and it's just what Bitcoin does. It's like the meme in Bitcoin, and the perfect tool to sell it is just that Bitcoin has an inherent number go up technology that we are applying on the common man and on the fiat system. And that's very true. Like Bitcoin just goes up because it's a fixed supply, and we are making more dollars, more kroner, more euros. So that is decreasing in value over time, which makes it so that if you measure Bitcoin in that useless fiat currency, of course Bitcoin goes up. If you measure Bitcoin in Bitcoin, it doesn't go up. One Bitcoin is one Bitcoin, and it will always be one Bitcoin. But if you measure in dollars, then it would go up forever.
And basically during this time, you're also trying to exploit these different tools to basically create more Bitcoin per share, and that is what you call Bitcoin yield.
Yeah, exactly.
And can we just dig a little bit deeper into that, what that actually means for the investor and how we should interpret it? So what is Bitcoin yield so far, and what has your yield been?
Yeah, sure. So far we've been listed for about 2 months, and we've done 6% so far. CAGR, that would be about 60%. You can't measure, that's not a reasonable way to measure, but it's an industry standard to have that number, so I'm putting it out there, but that doesn't mean that we generate exactly that amount each year. It's just measuring the current rate if you extrapolate it. But we've done 6% so far, and that's very concrete, and that we're very proud of. And the question then becomes, okay, the Bitcoin yield, where does it come from? And we don't, I mean, in our case, we don't have a business that generates revenue. How are we generating Bitcoin yield? Because it's not like we have a software business, profit, buy more Bitcoin, not making more shares. That's the type of yield. We don't have that. So how do we generate yield then? And we have a few different tools. The first is, I mentioned that before, if we have a premium, you do a share issuance because you can pay in shares. And then you can effectively think of it as buying Bitcoin at a discount for us. So we buy Bitcoin at a discount by issuing shares, and then that way we make more Bitcoin per share. If we have the other direction, so we have our share price is lower than our net asset value, then we can sell Bitcoin and buy back the share, pushing up again the Bitcoin per share, because you have effectively discount on the share instead, seen from the Bitcoin price. So we can sell Bitcoin, buy the share, push up the share price to net asset value, and then you generate yield that way. So we have those two very simple, pragmatic tools to play with always. As long as the market is not perfectly correlated to the net asset value, we can generate yield either above or below. But you have other tools that are needed, because at long periods of time we will be at net asset value. So then you have things like Bitcoin convertibles, where you borrow Bitcoin if your share price reaches a certain SEK value and there is a premium, then it converts to shares. If not, then the Bitcoins are paid back. Very low risk for the company, low risk for the lender. Everything is measured in Bitcoin. You have fiat convertibles, which is, as I mentioned, money in, buy Bitcoin, and then effectively hope that Bitcoin goes up more until you have to pay back the value of the convertible, or it has converted if the share price reaches a certain point. If that's not a long time scale tool, if you have a 2-year convertible, I would say that's very dangerous. If you have a 5-year, not that dangerous. If it's 10-year, I would say not dangerous at all, because we're all assuming Bitcoin will increase over time. And then finally, there's a lot of tools, but one more very important tool is the preferred share, which is a I would say, the optimal tool for a Bitcoin treasury company to raise fiat to buy Bitcoin for if they're at net asset value.
I was thinking you talking a lot, both previously and now, just about the Bitcoin convertibles. But you actually issue the Bitcoin convertible yourself, and can we just talk a little bit about, in specific terms, what that actually means for your shareholders and your investors?
Yeah,
I mean,
sure.
the current one.
So the current one is quite straightforward. We borrowed 21 Bitcoins, and if the share price reaches a certain level, so in our case 500, and stays there for a certain period of time, then the Bitcoin we received gets converted. And that only happens so that it's a positive Bitcoin yield. In our case, it has to be above 1.1. So that means that we're generating a Bitcoin yield that can't convert below net asset value. But it also means that for the person that converted, they convert at a lower price than what is set at. So they make it's a discount for them, so they generate more money in that sense than just holding the Bitcoins. So it's a win-win for both, which is quite interesting. And why it's a good tool for us to use, and I'm comfortable with it, is that let's say Bitcoin goes up, but the share price, we follow NAV. Well, we just pay back the Bitcoins. Or Bitcoin crashes at conversion or at expiry, we just pay back the Bitcoins. Since we anyway just hold Bitcoins and we're measuring Bitcoins and do everything in Bitcoins, it's a very simple and safe tool. So we welcome everyone that's interested to do that type of tool, because it's a really good way for everyone to generate Bitcoin or potential upside for their Bitcoins, of course. But it's the risk for the Bitcoiner per se is that you're giving up third-party custodianship to us. So it's you get third-party risk just as if you buy an ETP or ETF or something like this, because then we hold your Bitcoins. We have a very robust and rigorous, setup of perimeters to make sure that the Bitcoins are secure. And it's not like, I'm the CEO of the company. I have no access to anything. I don't have access to bank accounts. I don't have access to the Bitcoins. That would be a stupid way to set this up. Instead, it's very slow. It's very process oriented and tedious on our end to actually move Bitcoins. And it's not held by us. It's done by, licensed third-party custodians that's how you're supposed to set this type of structure up. So I would say the third-party risk is very low, but it's a good note to have that for a Bitcoiner. If you provide Bitcoin to us, you have a potential to generate more Bitcoin, but it's a third-party risk.
And then you have different, tranches in the Bitcoin convertible that you can convert to. So it's not 500 full stop, it's 400, 450, 500, 550, 600, and those kind of levels, which kind of adds into, because as I visualize it in the future, when this convertible converts, that the owner of these Bitcoins will convert maybe not everything at each tranche, or is it partly all these tranches, or how will the total volume be distributed?
Yeah, so exactly, it's 5 tranches of 21 Bitcoins each, 105 in total. And the logic is that if the share price increases over time, they strike, and then the next one is initiated, and it strikes, and the next one is initiated. So the convertible functions so that in a positive Bitcoin environment where when the number goes up, then they start to strike, and they can strike quite rapidly, many of them in a row. But it's a tool. It's not guaranteed to strike. If we get a bear market, for example, the Bitcoin convertible will not strike. So it's a tool for a bull market, but that's okay, because over time, as long as we have these type of tools, Bitcoin takes care of the rest. Bitcoin's volatility will make sure that at some points Bitcoin will be at a discount compared to our share price. At some point, it will be kicking off these convertibles. So we're betting that Bitcoin will continue to be volatile, and we're structuring tools around that to make sure that we can just generate Bitcoin yield and issue shares in a comfortable way when it strikes.
And Bitcoin convertibles is one tool. Another tool which I would like to talk to you a little bit about is your preferential shares, or preference shares. And I know you're quite fond of it, and you have quite recently been thinking about it and been released maybe into preferential shares, or what's your stance?
Yeah, exactly. So we just issued the documents to request for shareholders to meet so that we can start to issue preferential shares. And it's a really simple, plain vanilla preferential share, which I think is the right way to structure it. If we take, of course, as everyone does, we look at Sailor and at Strategy, see what they do, and he mentioned that if he could redo everything, he wouldn't do convertibles, he would only do preferential shares. Why is that? And the reason is that preferential shares is, I think, the perfect tool for a treasury company to raise more fiat. Because what you do and how preferential share works is that we issue a share, but it doesn't have right to the bitcoins in the same way as a B share does, the listed share on the stock exchange today. What this share does instead is that it has right in fiat value to get a certain amount of fiat each, in our case, month, because it's a monthly preferential share. So the price of the share when we issue it is 120 kroner, and we're paying 1 krona per month forever, or until we buy the share back. So you know that you will get 1 krona per month forever from us. We know that we got money today that we buy Bitcoin from. What we are betting on is that the effective rate, which is then 10%, because 120 and you pay 1 krona per month becomes 12 payments per year, so 12 kroner per year. Effective rate 10%. Our bet is that Bitcoin will continue to grow by more than 10% forever almost, or at least during the coming foreseeable future. And if it does, we make the spread between that. So we pay 10% per year on something that is decreasing in value, the fiat, and buy an asset that we believe increases in value. And that's how the value is created with preferential shares. So that's how you raise fiat. What is also really good with preferential shares for the shareholder is that the company, it's not a loan in that sense, it's a dividend. So we pay out a dividend, but dividends can in theory be paused, but then they accumulate for the shareholder. And so let's say it's an extreme bear market, then the dividends can be paused, and then you pay out all of it a few years later, or months later, or weeks later, when you can pay it. So it's a very flexible tool from the perspective of the company, which is good. Then again, there's two risks with this tool, or there's always many risks, but two primary risks. One is that if we stop paying dividends ever, the trust is ruined, of course. So we will always pay out the dividend and do the utmost to pay out the dividend, because it's extremely important for us. Otherwise, we will have a very hard time to issue new preferential shares. And the second risk, I would say, is that this is not a tool that we can use only. Because let's say we would raise way too much money. I go out and raise, let's say I have 200 million on the balance sheet, and I raise like a billion in preferential shares. Suddenly, you have to pay out 10% of a billion each year. You have 1.2 billion and you're paying out 100 million. That's quite a lot of money that is disappearing. That's about 8% that is disappearing each year. That's quite dangerous. What I would like to do instead is that we do a preferential share, and let's say let's say we have 200 million, then we issue 20 million in preferential shares. So then you have to pay 10% of the 20 million, which is about a bit less than 1% per year of your total Bitcoin stack. For shareholders, very safe, because we're not going to go bankrupt from paying 1% per year in dividends. The Bitcoins themselves are going to go up over time, so that percentage is going to decrease over time. But also for the preferential share owner, they don't have to bet that Bitcoin goes up. What they bet on is that it's there and provides them with a comfortable cushion to make sure that they can get their 1% per year, or in their case, they're the 10% of what they invested per year, because we have such a big Bitcoin stack compared to the preferential shares that we issued. So it's very important for us to not issue too many preferential shares, just as it would be really stupid of us go and let's say I have my Bitcoins and I borrow against them 50%. So I double my stack, let's say. Right. Yeah, 100% borrowing against them, and then Bitcoin halves and we get liquidated. That's the wrong way to do this. We should focus on long-term value accrual, more Bitcoins per share, and do that with little risk. And preferred shares adds a perfect tool for us to raise funds and have no risk of ruin, while providing a really interesting product for the market, because there's no preferential shares out there today that pays every month like we do and have the same amount of interest here in Sweden. So it's a super interesting tool, I think, and we'll see what the market thinks of it when we issue it.
And let's take a little bit more of a bird's eye view here and discuss a little bit, because you touched upon that. What is like what is a good amount of leverage? Because preferential shares counts as equity, but it's a hybrid, right? It's like equity and debt, but neither at the same time, is my understanding. But can we talk about how I preferably would like to structure it? I mean, you have a lot of equity, a lot of it coming from the IPO, and you have a good solid foundation. But what is your ideal structure? We're talking, if we have, let's make it easy, 100 Bitcoins. How much would you like in pure debt, convertibles, and in preferential shares, just in percentage of 100?
Sure. So I think the way we should structure this is to have set limits, and what I would be comfortable, I think, with over a period of time is, let's say, 10% direct leverage and maximum 20%, including preferential shares. So going above, at the moment at least, going above 20% of as preferential shares would feel like too much risk. At the same time, it's not risk because we can pause the dividends, of course, but then again, we issue these with the expectation of always being to pay them, and that's really important that we do. So therefore, I would like to make sure that I can uphold my promise to the shareholder that has rights to dividends. Therefore, I don't want to take too much risk on my end, because I'm not generating Bitcoin yield really quickly. That's not the goal. I don't want to take a lot of leverage and make sure that like we're the fastest growing treasury. That's what we are doing, is we're beating ETCs, ETPs, ETNs, ETFs. They have billions of dollars in their financial products. They take Bitcoin from you each month. We give you Bitcoin, and that is going to solve a lot of people's problems. You can just switch over to us, and suddenly you generate more Bitcoin per share if we succeed to do what we've done so far in the long run. And that is the goal. If I was someone that people believe take a lot of risk, we will not get that type of money, because when you put your money into an ETF because you don't want risk. It's not like my target audience is not the 2x leverage on Bitcoin ETF buyer. Like, that's a short-term mindset guy. In my mind, what I want is the guy who, you already have Bitcoin and you understand that. You have allocated some part into ETFs, ETPs or ETN or ETC, but you're irritated of them taking 2.5% per year, which some of them do. Like, it's insane. Instead, you switch over to us and you get more Bitcoin per share. You don't have to pay. We don't charge a fee. We don't take out salaries. It's a very clean way to just generate more Bitcoin per year. We're not doing this for free, though. I'm not just messiahs here. That's not what we're doing. But we're not taking out salaries. That's not how this is structured.
But and what is your structure? I mean, you obviously need some food on your table as well. What's your upside in B2C?
So exactly, our upside is if we generate more Bitcoin per share, measured in Bitcoin. So it doesn't matter if Bitcoin goes up or down in Swedish krona. We only measure you have received more Bitcoin for your shares. Then we have done a good job. We take 20% of that upside to give to the board and give to the operating team, and whoever needs to operate the company gets 20% of the upside of the newly generated Bitcoins. So for example, if we let's say I raise 100 Bitcoins, that doesn't mean that we can take 20% of that. It means that if we generate 100 more Bitcoins per share, so we've grown the entire Bitcoin stack, but we have the same amount of shares. 20% of the additional Bitcoins that we've generated, we take 20% of that for the board, the operating team, and everyone. The upside is there. So my belief is that salary is not a practical way to operate this type of venture, because if we took out only a salary, then I should do as little as possible and no risk. If we put some type of extreme leverage on it, then it doesn't matter. The salary is the same salary. But whereas if in this case I have put my own value into this company, so for me it's very important that it works in the long run. I measure everything in Bitcoin, and I want to generate more Bitcoin per share, because that's the value that we can provide. That's how you get value, and you get 80% of the value, and we take 20% of the value that we have generated, but only in Bitcoin per share. So not Swedish krona. Bitcoin has gone up. That's irrelevant. We haven't done anything there. So I think it's a very fair and pure structure.
You're very keen on performing that, because it's basically 20% performance fee, basically, if you want to.
Yeah, exactly. And it's nice, because let's say we do a shitty job for 4 years. You can be happy that we take no salaries or anything. So we've just done nothing, and we get nothing for it. And that's how it should be. No one should get anything for doing nothing. You either work hard and you deliver value, or you get nothing. And that's like how humans work. It's the way to structure everything to get things done. Maybe proof in the pudding that communism hasn't really worked that well so far. It's not a practical structure, because the human mind is lazy, and you have incentives. And in our case, we have the exact same incentive as the shareholder, and we get nothing if we don't perform. And I
appreciate that too, Christoffer. So it's nice to be aligned with the shareholders' incentives as well.
Yeah.
Okay. I think there was one thing I would like to circle back to, and I mean, we've talked a lot about the BTC yield and basically your different tools. But the one thing which we haven't talked about is, which also appears in your quarterly reports, is MNAV, months to cover net asset value. Can we just briefly explain what that means so the investors up to date?
Yeah, good point. Yeah, that's a new terminology that only our industry uses, kind of. I mean, you have similar ways to evaluate normal companies in terms of PE, or like how many multiples of a company's profit is it valued. That's a bit the same. In our case, since we don't have profit, what you measure is how long time does it take for us to, if you invested in us today, how long time does it take for you to get back to the point where you have equal amounts of Bitcoin as you invested. And the higher the MNAV, and that's MNAV is multiple of NAV, the more Bitcoins we have to generate to give you back your Bitcoins. So as an example, let's say we have 10 MNAV, so we have 10 times more, the value of our company is 10 times our Bitcoins. Then if you buy our share, we take money and buy Bitcoin, but 90% of that goes to previous shareholders, 10% goes to you can think. So now you have 0.1 Bitcoin. But you invested 1 Bitcoin. So we have to 10x our Bitcoin per share here to give you back your Bitcoins. That's hard, and that takes a lot of time. What we have at the moment is, and I think the industry is going to trend there, is that we will have a relatively low MNAV. So we have, 20, let's say 20% above our net asset value, or 10% above our net asset value. That means that if we generate, let's say we have 10% and we generate 6%, as we did now during 2 months, in about less than 4 months, we have given you back the money in terms of Bitcoin per share. So you invested in us, and then 4 months later, you're back to where you started in, measured in the amount of Bitcoin that you have. And from that point on, we just generate more Bitcoin for you over time. So I think our company is one of the best in terms of how long months to cover MNAV. How long time does it take? How many months does it take for you to cover your investment? And in our case, today it's just a few months, which is quite interesting because we don't have that much premium on our net asset value. For us, that's fantastic, because I know we have, like, every shareholder that we get will from this point on be a content shareholder, because we know that they invest at not a crazy premium. Instead, they invest close to NAV, and we just generate more Bitcoin for them, making sure that everybody's in the same boat, everybody's content, and everybody just understands the value of getting more Bitcoin over time, instead of buying some, for example, let's say the latest and greatest treasury company that has an insane growth but also takes risks. Then that's more of a stock trade. And if that's the goal for someone, then I wish them the best of luck. But in my case, I think Bitcoin will be the most important asset you will own your entire life. And if you are willing to bet that type of risk with that, you don't understand the extreme upside of just not losing your Bitcoins and generating more Bitcoin over time. That's much, much, much more important. So I think it's a good metric to understand that buying our share today is quite a good bargain, in the sense that we generate more Bitcoin per share relatively quickly.
I like the comparison with price per earnings. I think metrics kind of correlates it well and put it into terminology which I think the common investor is used to.
Yeah.
But thank you, Christoffer. I think would you like to leave us with something you're looking forward to in the future here, Christoffer, before we say proper goodbye here?
Yeah, sure. I mean, on one end, I'm looking forward to the upside of Bitcoin goes up and everybody's happy in the coming bull market. But I'm kind of looking forward to the bear market as well, because what I think will happen is that we will see this cascading effect of just treasury companies exploding left and right. And not today. I think we'll have a bull market before we have a bear market. But let's say when it starts, I think that will be a great opportunity for us that will be here to generate a lot of Bitcoin yield, because we can buy Bitcoin for cheap. So I'm looking forward to blood on the streets, I guess.
I think discounted good assets is generally a good understanding of investments, I think.
Yeah.
But thank you very much, Christoffer. Is there anything you felt that we've missed, you would like to touch on before we say goodbye and thank you very much?
Just if you're listening to this and you listened this far, if you don't have actual Bitcoins, not shares, not ETPs, not ETFs, not ETN, not ETC, if you don't have actual Bitcoins, what the hell are you doing? Go buy real Bitcoins, please. Just before you buy our share or any share, just buy real Bitcoins and try it. Buy a hardware wallet, lose your keys, get confused. It's so important, I think, because it will open your mind to I always get goosebumps talking about Bitcoin, but there's nothing more important. Just do it. Just don't be lazy. Go buy a hardware wallet. Try out Bitcoin, please, and then buy shares. But don't start with shares.
Perfect. I'm one of those persons, Christoffer, so I think that's next on my to-do list.
Yeah. Go buy Bitcoin.
That was very clear. Thank
Good.
you very much, Christoffer, and good luck, and we look forward to having the next update in the future.
Yeah, thanks a lot.